What's going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some of the data points, break it down, what's moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So Opendoor is down 5.84%, 722 the low, 753 the high, and 22.3 million shares being traded. So a little bit low for the volume. Today is an odd day because when it came down to this week, I think just generally people were fairly optimistic. We did have a lot of good data coming out to justify a potential rate cut. So for instance, even this morning, we had S&P Global and ISM Manufacturing coming out. Difference between the two, S&P includes small cap, mid, and also large, whereas ISM is just mid and large. So difference between the two, S&P did phenomenal, so it came in at 52.2, forecast of 51.9. So that goes to show that kind of the small cap are expanding. That's always a good thing. Definitely shows that there is strength. And this isn't a major concern to a lot of the Feds. So when it comes down to Fed concern, it's more consumers. And unfortunately, we did have data that did come out on the 29th, signaling US Black Friday sales hit record high of 11.8 billion. That is up 9.1% from the year prior. And this is just simply online sales. So this does not fit the narrative that the Feds or the market wants to kind of see, right? We want to see consumers and just the labor data a little bit negative and struggling, and not significantly negative to justify potentially a recession fear to start to increase, but we just want to see things slightly negative to justify a rate cut. So right now, this data does not fit that narrative. Currently, there is a 86.4% likelihood of a 25 basis point cut for the upcoming December 10th meeting. I feel like this data is kind of stalled because it hasn't moved whatsoever. Most likely, once it does update, it'll be probably around that 60 to 70% range, which again isn't that great. So it is simply because of this. Aside from that, Opendoor hasn't put out any news, no fireside chats, no speculative things. Kaz, even on social media, has been fairly quiet, and I think a lot of other individuals are starting to kind of take notice of that. Even Kaz's last tweet was just saying faster. I'm not really sure exactly what that is meaning, but it was posted November the 30th at 12:09, so I don't know if he's having just a little bit of one-on-one time with his wife, or this has some hidden meaning. I don't know. Let me know your general thoughts on what this potentially does mean. But nonetheless, aside from that, looking at shorts, they are taking advantage of all this and they are returning. Right now, returning 338,000 shares, 13.96% of the free float is being shorted. Works out to be 109.21 million shares overall being shorted. So shorts have definitely taken advantage and returned a significant amount. So you can kind of see short interest was about 24%. That was November the 13th. And then since the 24th, things just dropped like a rock. So yeah, kind of interesting. Unfortunately, for those of you that were really kind of jumping up and down for a potential squeeze, this unfortunately doesn't really fit the narrative anymore. So short score 57.4 is fairly low, and so the higher the number, the higher the likelihood of a squeeze happening. This has dropped from 66.6 on November the 6th, so it looks like the likelihood of a squeeze is kind of moving away, but nonetheless, 3.4 million in calls, 1.04 in puts, and then 58% of all the options being done are bearish in nature. In my opinion, it might be unpopular opinion, but I do feel that the market is going to get bought up in the second half of today, if not tomorrow, because this data right here doesn't technically justify, it's not official, right? It's just a tweet, and it's really moving the market quite significantly. And so far, the data that's been coming out has been actually positive. So I wouldn't be surprised in the second half of the day if you start to see more and more bullish options being done. And because, as I've mentioned, if you ever bet against the market and with options, this is how you can make some very serious money. So right now, it looks like the market is anticipating for further downside, and that kind of does match with the Elliott wave technicals. So that does have a pivot point of 769. So for as long as it is below that, then it is anticipated to get between that 515 and 436. So kind of crazy stuff for that. From a bull standpoint, you see a consensus for it to be roughly around 8. by the end of this week, and then the bears are anticipating for it to be sub 750. So definitely there is more upside anticipated. Frequency is more oriented towards the lower though. These are some of the transactions occurring on the secondary market. So this is again why I always say do not believe in this. Don't just look at the stock price and see, oh my god, it's red, time to sell. This is being moved through algorithmic trading, and it is artificial because from this we can see big money's actually buying the dip. You see obviously some institutions selling, but most of these transactions are institutions buying. So as well, on a side note, shorts returning is also another bullish sign. So take advantage, buy the dip in my opinion, because this is a unjustified sell-off. These are some of the transactions occurring on the dark pool above $100,000. So nothing crazy significant. Right now with it at 724, it is trading between this pivot and this S1. So 585 and 747 is going to be the next strong target slot for resistance. Best case scenario, Opendoor does recover to that 747. So that might be a potential good swing trade if you ask me. Aside from all of that fun stuff on the actual chart itself, it's below now the 50-day moving average, so not the best. It is currently flirting with that 10-day moving average, so that's going to be a big deal for depending on where that does close. And so that is sitting at 731, so not too far out of reach, but you can kind of see from the flow right here, algos are where most of the volume is coming from. So this is why exactly I like to not hype up people. I don't like to bring people down or the stock or anything. I'm not here to get you to buy or sell. All I'm doing is interpreting the data. And from what I can see, today is a artificial kind of suppression. And so big institutions are kind of buying the dip. So you do whatever the hell floats your boat. Like I said, but stochastic RSI is somewhat neutral in nature, so it's not overbought nor oversold, so it is what it is. No new analyst ratings on a side note, no real articles coming out associated to Opendoor other than just linking it to meme stocks. So I feel like that debate is still going on, whether it is a meme, cult, momentum play, or something else. I do feel it falls under the momentum category, but I definitely don't feel like it was a meme. Maybe first thing initially when it first started to rally back in like July, but since then I feel like a lot of people have grown to really like Kaz and what he's doing. So let me know your general thoughts on Opendoor. Give yourself a shout out if you are buying, if you are selling. Where do you see things going in the short term? And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. I put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.